Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Thanks for joining us. Let's get across those movements in markets overnight. It was a savage session on global equity markets as oil prices surged on supply fears amid an intensifying conflict in the Middle East. The US and Israeli bombing campaign continued against Iran, while more tankers came under attack in Gulf waters. The inflationary impact of rising oil prices fueled the sell-off on Wall Street. The losses most pronounced on the rate-sensitive Russell 2000 small cap index, while the Dow was also down more than 1.5%, with broad-based selling there among industrials as well as healthcare, consumer staples and materials. Now, the losses could have been worse if not for the energy sector, with shares of US natural gas companies tracking a gain in natural gas prices. The airline subsector tumbled 6%, while cruise stocks also sank, whereas shares in travel booking companies surged. In the tech space, Broadcom shares rose after a projected AI chip revenue would exceed $100 billion by 2027 and announced a new $10 billion buyback program. And supermarket chain operator Kroger forecast muted annual sales and profit. Well, the bombing campaign against Iran has continued, while it's launched a wave of missiles at Israel and vowed to retaliate against Americans after a US submarine torpedoed an Iranian frigate. And more tankers have come under attack in Gulf waters, and Iranian drones have entered Azerbaijan to its north, prompting concern the war could drag in other oil-producing states. Drone attacks also targeted at an Iranian opposition camp in Iraqi Kurdistan, as well as an oil field operated by an American firm. Meanwhile, President Trump has claimed the right to decide Iran's next leader. Well, in the latest US economic data, fourth quarter productivity beat forecasts, growing 2.8%, with unit labour costs rising at the same pace, while weekly initial jobless claims were steady. US Treasury yields have continued their ascent as the expanding war in Iran put pressure on oil prices, stoking concerns about rising inflation and dampening expectations for Federal Reserve interest rate cuts. The US 2-year yield rising to a 1-month high of 3.59%, the 10-year was at 4.15. Australian 3-year government bond yields rose to 4.42%, the 10 years at 4.86. And the US dollar index was up around 0.5% on the day, the Aussie having fallen back to 70.1 US cents. Oil prices have extended a rally as the escalating Middle East war disrupts supplies and shipping, driving some major producers to cut output. Brent crude up around 5% to $85.40 a barrel, and gold erased earlier gains as rising treasury yields and a firm US dollar pressured prices. Spot gold falling more than 1% to be around $5,080 an ounce. Copper fell more than 1%. Iron ore is up to 103 US a ton, and Bitcoin has fallen back to around 71,000 US dollars. So let's get across those market moves with a focus on tech. Brad Gastwirth joining us from Circular Technology. Brad, welcome back. That was a fairly brutal session we saw on Wall Street overnight. What do you think the market is watching at the moment? I mean, clearly it is that oil price.
Yeah, I mean, clearly the conflict in the Middle East is taking all the headlines right now, Andrew, and I think it's going to be quite volatile for financial markets until we get to the end of this conflict, which I don't think is going to happen anytime soon. I mean, right now, the markets are solely focused on what's happening in the Middle East, what's happening in the Strait of Hormuz, given 20% of the oil supply goes through that channel. So right now, all eyes are on the conflict, and I think you're going to see volatility increase in the coming weeks.
Now, obviously, Brad, you're focused on tech. What do you see as the implications there? I guess particularly you're looking more at, well, obviously you've seen the market reaction, but you're saying supply chains. Are they likely to be affected or not? What are you seeing?
Yeah, I actually think it's something that not a lot of people are talking about. And I think it's a good question, Andrew. There are minerals and different components that do come from the Middle East, some raw materials that could actually impact some of the supply chains. I know that one of the lawmakers in Korea recently made comments that there could be some impact to semiconductor companies there because of this. I think right now the biggest issue and concern is energy. and also the increased insurance costs that will be coming from the region. Right now, it's not as alarming to make major impact to the supply chain, but right now the supply chain is quite fragile as there's so many components that are on allocation and that are incredibly tight, and something like this could just make a bad case even worse.
So you're saying you need to watch essentially, or make that distinction between that market sentiment reaction and actual structural damage that may be caused.
Yeah, I mean, I don't think this by itself is going to derail the growth we're seeing in artificial intelligence. I mean, all checks continue to show incredibly strong demand and growth within AI. However, when you have a major macro event taking place like we're seeing right now in the Middle East, that does bring more volatility and concern to companies. So from a sentiment perspective, I think there's going to be an overhang until there's some closure. So I do believe that volatility will continue. That being said, we just had results from Broadcom that had incredible numbers, incredible growth in forecast. So everything's humming along, but again, it's hard to ignore what's going on in the macro side.
All right, maybe just can you expand a little more on what you saw out of Broadcom's results?
Yeah, I mean, the numbers were quite phenomenal. If you look at their XPU units, which is really their custom ASICs, these are things that compete with Nvidia's very high-end GPUs. It's growing extremely strong. Their forecast was up and to the right. They're getting into numbers that really beat most analysts' expectations. And even Hock Tan, the CEO, made a comment about you could see even 100 billion in revenue from the company in a year or so. So I think you're still seeing incredible demand, and this is a multi-year cycle. And he even made a comment that we're just in the early innings, and which is something that I've been saying as well. That even with the explosion of growth that we've seen over the last year or so, it's still in the early stages. So I expect strength to continue across the supply chain. I think component companies are going to continue to do quite well, including memory. Memory is an area that's incredibly tight, and companies have performed quite well, and I don't think that run is over, like a SanDisk or a Micron.
Now, Brad, in other news this week, Anthropic did see huge revenue growth, in fact. Yet, this comes at a time when defense contractors have now plans to drop it as a result of what the Trump administration has put in place, seeing it as a potential supply chain risk. Can you expand on that? Why has the Trump administration gone down this path?
Yeah, I mean, it's hard to speak for the government. However, it sounded like Anthropic did not want to yield to some of the technology and what it could do for the government. I mean, ultimately, they did not yield on their demands, and that's why Trump made those comments, made pretty harsh comments towards Anthropic, and then not shortly thereafter, you had OpenAI win that government contract. So I think right now the company's still doing very well. I mean, obviously, it's a loss to have a major contract that they're not going to have. You have to give them some kudos for not allowing the technology to be wrongly used. But I mean, again, all indications is we're still seeing explosive growth, and it's going to continue.
Now, Brad, given that sharp sell-off we saw, particularly in the last session, tech didn't fare too badly. In fact, what are you seeing there? Is there an appetite to get it back into tech, particularly some of those software companies that have been sold off very heavily?
Yeah, I mean, the software side certainly was thrown out rather aggressively after some of those reports came out a few weeks ago. I do think that component companies like a Broadcom, for example, it certainly bucked the trend today, up 4+%, and they're again executing incredibly well. I think the mega cap companies like an Alphabet or an Amazon are still executing incredibly well too. And I think when you see markets decline, it's a good opportunity to add to exposure. All of this being said, I think you have to be very mindful again of like these macro events. One thing that we haven't seen over the last several years is the macro events derail the financial markets. And we had Russia, Ukraine, we had the earlier Middle East conflict with Israel and Gaza. We had all kinds of issues that the market just ignored. Obviously this is a war, and escalation is quite important and things that investors will focus on. The other thing that's now come out for the technology market is Trump recently is trying to have new laws around how many chips can be sent to other regions, not just China, but to other foreign countries. And that's another thing that a lot of investors will be looking at, because if that does go into place, we're talking as less than 1,000 to 200,000 plus chips, even the smaller units would need to have government approval if this goes through. I mean, that certainly worried a lot of investors. That's why Nvidia went down on that news. I think it's something that we all have to pay attention to.
That is Brad Gastwirth from Circular Technology. All right, so that's what's been happening on, well, particularly Wall Street. Let's refocus then ahead of the market open here and what we can expect. Given those sharp falls we saw in global markets, similar moves expected here. S&P ASX futures down 1.4%. We'll get right across all those market moves when we get across the open in just a couple of minutes' time. Stay with us for that.